All right, today we are diving headfirst into one of the wildest stocks out there right now, Motorsport Games, ticker MSGM. It's been making some absolutely crazy moves, and we're going to follow the data to try and figure out what's really going on, what's the hype and what's the reality. Let's get right into it. So, what kicked off this whole investigation? It was this number, 85,221%. That is the insane volume growth rate for MSMG recently. I mean, an increase in trading activity that massive just screams for an explanation.
And that really is the central question for us today. Is a number like that a signal of a massive, once-in-a-lifetime opportunity, a rocket ship about to take off? Or is it a dangerous trap, a bubble just waiting to pop? We're going to piece this together clue by clue and see what we find.
Okay, first things first, let's just get the lay of the land. Before we dive into all the weird, conflicting signals, here's a quick snapshot of the stock at the center of this whole storm.
And boom, right out of the gate, we've got a puzzle. On one hand, the stock has a really strong technical score, 75 out of 100. That's pretty bullish. But then you look right below that, and the risk-to-reward ratio is flagged as unfavorable. So the data is basically yelling go and stop at the exact same time. This is the mystery we need to unravel.
So, let's put on our prosecutor hats and build the case for the bulls. Why does it seem like everybody is suddenly jumping into this stock? Well, at first glance, the evidence for a powerful move up is pretty overwhelming.
Let's start here. This is the Relative Strength Index, the RSI. You can think of it like a hype meter for a stock. Now, anything over 70 is considered pretty hot or overbought. MSGM is sizzling at over 78. That signals some really intense, powerful buying pressure. The market is just rushing in.
And it's not just that one thing. It's like a whole chorus of indicators are singing the exact same song. The price, it's trading way above all the key moving averages. The MACD, another huge momentum indicator, is positive and pointing up. The stock has literally punched through the top of its normal trading range, right above its upper Bollinger Band. And of course, we already know the volume is just off the charts. It is a textbook breakout scenario.
The source material really sums it up perfectly. You look at all of this, and you think the investigation is over, right? Case closed. But you know, every good detective knows the most interesting clues are the ones that just don't seem to fit the story.
And this is exactly where our story takes a sharp turn. Because when you start to dig just a little bit deeper into that massive volume, you start finding some pretty serious red flags hiding right under the surface.
And this slide right here illustrates the core problem beautifully. Over on the left, the on-balance volume is rising, which confirms, yeah, a lot of money is flowing in. But look at the right. The accumulation/distribution line is falling. A lot of traders see that as a clue to what the big institutions, the so-called smart money, are up to. So picture it like this. A huge crowd is excitedly rushing into a party, but the people who own the house are quietly slipping out the back door. It suggests that while retail excitement is pushing the price up, the big players might be using that as an opportunity to sell.
Now for our next clue. A big, ugly negative number, negative 44.69%. So what on earth does that mean?
That number tells us how far the current price is from the volume-weighted average price, or VWAP. To put it simply, it means the average person who bought into all this recent hype is already losing money. They're underwater. And that is a huge red flag, because it creates this whole army of nervous investors who might just rush for the exits at the first sign of real trouble.
And finally, let's just zoom out for a second. All this explosive, short-term excitement is happening inside a much larger, much longer-term negative trend. The data's linear regression shows a clear overall downward slope. So this powerful breakout is essentially trying to swim upstream against a very strong and very negative current.
So, we've got all of this conflicting evidence laid out on the table. How does this story possibly end? Well, the analysis really points to three potential scenarios from here. According to the data, the bullish scenario, thanks to all that momentum, still has the highest probability at 50%. But, and this is a really big but, there's a 30% chance of a bearish reversal and a 20% chance the stock just goes nowhere. You add those up, and you've got a 50% chance of a bad outcome. We're talking about a coin flip, which is a very, very risky place to be. So instead of trying to guess which way that coin is going to land, the analysis gives us specific price levels, triggers, that will tell us which scenario is actually playing out. If the bulls can push the price above $4.69 and hold it, that's a huge confirmation for them. But if the price breaks down below that floor at $2.98, that could trigger a really sharp reversal.
Anything in between is just the market trying to figure things out.
So after all of that, what's the one thing you really need to remember? Well, the goal here isn't to predict the future. It's to understand the battlefield. And that means you need to know the two most important numbers in this entire investigation.
And here they are. The battle lines are drawn. $2.98 on the downside, that's the key support, the floor that the bulls absolutely have to defend. And $4.69 on the upside, that's the resistance, the ceiling they have to smash through to prove this rally is for real. The outcome of this whole story is going to be decided right between those two prices.
And this final thought from the source material is so critical. This is not normal market behavior. This kind of extreme volume suggests something else is going on under the surface. Maybe it's a short squeeze. Maybe the market thinks big news is coming. Whatever it is, it's a sign that you need to be extra cautious here.
So, with this absolute battle raging between explosive short-term hype and some pretty serious long-term risk, the key isn't to try and guess what's going to happen. The key is to watch the levels. They're the ones that are going to tell us how this story ends. The only question now is, what are they going to tell us next?